Elsewhere, trading online just got a whole lot cheaper. Charles Schwab said today that it's eliminating commissions to trade stocks, ETFs, and options. That decision follows a similar move made last week by rival Interactive Brokers. And while it is good news for brokerage customers, investors don't see it as good news for the industry. Shares of Schwab fell sharply today. So did rivals like TD Ameritrade, E-Trade, and Interactive Brokers. And joining us with his assessment of this move, we welcome Phil Blancato back. He's the CEO and president of Ladenburg Thalmann Asset Management. Good to see you. Welcome back.
Nice to see you too.
Commissions have been coming down for years anyway, but I think it's safe to say they're hitting bottom now at zero. What do you make of this?
Well, it's a monumental shift from how we grew up when we pay hundreds of dollars. Now it's zero, right? For the client and the asset manager, someone like me, it's a benefit because now we're able to eliminate any conflicts on what we might or might not buy. That all idea of cost is eliminated. So where does it put the focus? On asset management. Now, what's the best asset for me? Can I rotate my portfolio? I don't have to worry about that issue anymore. And it changes all of what Schwab is and probably many other firms in that the focus will be on the greatest mutual fund or ETF or money market that they offer, and can they compete for it?
Some of the stocks that got the hardest hit today, though, don't have the diversity in terms of the different businesses under their umbrella as Schwab does.
Very problematic for firms that don't. This is an asset grab. This is a way to get sticky assets in the door. And to do that, you're going to have to order a variety of services and products. And if you don't have those, you're in a lot of trouble. That's the only way they're going to survive on the other side is to offer those services. And if you don't, very problematic.
And this is a symptom of electronic trading. I mean, it's cheaper to execute these trades than it ever has been, so it makes sense for them to want to bring the commissions down anyway.
There's a variety of things that impact us. We've watched the collapse of fees everywhere, mutual funds, ETFs, so on. It's all come down. We've watched how we work as an industry come down. We watched robo-advisors come in and dominate the space. So what is this of? Now, can I offer a product the client needs and eliminate the conflict of buying it so that they work with me for a long period of time, like me as an asset manager or the end client is doing it themselves? It's eliminating an aspect of it to focus on squarely on asset management rather than transactions.
You mentioned, Phil, that it's an asset grab by Schwab. Will that then force more consolidation in the industry where you see companies that don't have the broad-based business that Schwab have seek out other partners? Might you see a lot of deals?
For sure. But I think this is a slow process. There's not going to be some knee-jerk reaction where a bunch of firms just cut fees. I think they're going to see how it goes for Schwab. But I do see an evolution. What do firms now offer that clients need besides a trade? Can they offer access to a good money manager? Can they give them packaged products that work more efficiently? That's what the money grab is, because once you have the asset, generally they're going to keep it. So it's the idea of how do firms evolve? How do they offer a better retail offering for the end client? Now the options are better because you eliminated cost.
Wow.
Amazing. Phil Blancato with Ladenburg Thalmann Asset Management. Always good to see you. Again, thanks for joining us tonight.